something of a sell-off in Amazon. What do you think investors might be worried about here?
I think, Andy, it was a good number. I mean, they beat basically on the top line and the bottom line. And I think part of it was the guidance was a little light for next quarter. They're a conservative guide, but it was down about $5 or $6 billion over where they expected. But AWS, which is a big component of the growth, was up 19% year over year. Analysts were expecting 20%. So, yeah, it technically missed, but still, it's a huge company to be able to grow a huge component of their business, 19%. I do like the cost cutting. I think we'll get some more visibility on that. I think there's some overall looking as to what's going to be the spend on AI. Obviously, now with DeepSeek out there, and people are wondering what that's going to do and what's the ecosystem look like from a spend. So I think that we'll get some more color when we get to the call.
It sounds a bit like Microsoft and Google. Their cloud is growing rapidly, but just not enough for investors.
It is a price to perfection. I think the Google number, I think they grew 29% and the street was looking for 30. I mean, these are huge companies to be growing at double digits still. And I think sometimes you get to these points where the stock valuations are expecting this. They're not expecting 20 or 30, they're expecting 21 or 31. And if they come in at 19 and 29, which are great numbers, the stock beats them up a little bit because they are at all-time highs here. I mean, Amazon hit basically an all-time high not that long ago. So it does make sense to take a little bit off the table, because investors were expecting another beat. But again, they beat on both top and bottom line. I think the guidance smartly is going to be a little bit conservative, but I think there's still a lot intact here for the Amazon story.
What is the main reason to buy these shares right now, Michael, do you think?
Well, Amazon, I think one of the reasons, the business itself, there's a lot of momentum there. I mean, AWS continues to do well, continues to grow their share, but the cost cutting is a unique feature for Amazon. Historically, Amazon never seemed to care about profits. I mean, it was always a revenue story, and they never had any profits. They really started to kind of look at how much profitability they have, and this profitability has turned into them becoming a player in a lot of different businesses, not just AI, but also sports in the United States. So I think their business continues to do well. It's a huge cash generator, and they have pricing power, which a lot of companies in this environment don't have the ability to pass on price increases to consumers. Amazon certainly does. I think that's a positive for them, and it's unique. Not a lot of companies have that in this environment.
When you say sports, you mean the way they're screening NFL on Prime?
Yeah, basically, you're going to get to a point in the United States where a lot of these big-time networks aren't going to be able to compete with the Amazons and the Netflixes of the world that have these huge cash flow generators. And sports is a huge business in the United States. It's a huge business globally, but it's where you want to be, and it's where the eyeballs are. And I think that's going to be an area where they can kind of bully their way into with this cash flow and become something of a juggernaut in that space as well. Like they are on the internet now with cloud, you pretty much have to deal with AWS or Azure. There's not a lot of other choices. I think they do that in sports as well.
Yeah, it's interesting. It's global. The Premier League in the United Kingdom, soccer, Copa do Brasil in Brazil, and the French Open in France. So it's not just in America that they're investing heavily in sports.
Absolutely. And as you know, sports is one of the things that survived COVID. I mean, we were dying to watch anything. It didn't matter where it was and what it was. So, and I think what's going to happen is in 10 years, we don't know what software is going to be here, but we do know there's going to be a French Open final in Roland Garros. So you do know there's going to be a Super Bowl played somewhere. And that's a business they can somewhat rely on. And there's a great advertising revenue there as well for Amazon to be able to capitalize on.
The cloud, it's their biggest source of profit right now, and it is the capex likely to be a drag on profit though for years. I mean, how expensive is it to build out the equipment needed for all this cloud business?
It's tough to know. I mean, obviously, I would tell you 2 or 3 weeks ago, we had a lot more visibility on what these folks were going to spend. With DeepSeek now, it's a little bit of a wrench in there because we don't know exactly what the Chinese did to get these results with AI. How many chips did they use? Did they use the kind of the newer chips, older chips? So I think once that more comes to light, we'll get an idea of what the spend is going to be. I think the spend, at least now, is going to be projected to be pretty high. But does it come down at all? Obviously, if it comes down, that's going to be a net profit to the company because they're spending less. But AI is expensive, and I think over time, it becomes a battle of who can afford to stay in there. I still think that's the thought thesis that we have now, unless something changes with more data coming out of China.
Do you think corporations will be worried about the dependence on just three massive cloud companies? I know there's other players in the industry, but is it making the economy vulnerable if we have these companies accounting for so much of the corporate data processing?
It does. I mean, you can make that argument also and one of the reasons that the Russell is going to recapitalize some of the indices is there's too much relying on these stocks as well to drive a return. So, yeah, I certainly think there's a scenario where you have to worry about that. I mean, we've had in the United States, one big phone company, and then we had to kind of break them up and kind of go back. So I think that's a consideration. The hope is technology keeps moving along at faster and faster rates, which allow more people to be involved because the prices come down. Right now, there's only a few players that can play because the dollars are so big. If we get an environment where it becomes a little bit more democratized and it's cheaper, you'll have more competitors show up. And I think it ultimately is better for consumers when there's more providers at lower costs and AI is more usable by more folks.
Michael, thank you very much indeed for joining us.
My pleasure, Andy.
Michael Landsberg, Chief Investment Officer at Landsberg Bennett Private Wealth Management.